Welcome, curious minds, to another deep dive.
Glad to be here.
Today, we're not just dissecting Boeing's current troubles, we're peeling back layers of analysis,
Hmm.
really trying to understand the anatomy of a corporate giant in crisis.
The complex one.
We're searching for those aha moments, the ones that will redefine how you see this aviation titan and maybe the industry itself.
It certainly has implications beyond just one company.
We're talking about the Boeing Company.
Indeed. And this isn't merely about an aerospace giant. It's a compelling and at times deeply concerning case study.
Concerning is definitely a word for it.
It really highlights how immense market potential can, well, tragically clash with profound self-inflicted operational and financial challenges.
Self-inflicted being the key phrase there, often.
Absolutely. It truly is a high-stakes scenario.
So our mission today, as always, is to unpack this huge stack of analysis articles, research, financial reports,
Lots of material.
and extract those crucial nuggets of knowledge about Boeing's investment profile, its future, and the very real risks it faces.
We'll try to cut through the noise, definitely.
Help you understand what's truly at stake for this global titan. So let's unpack this complex story.
Right. We'll be examining that stark dichotomy within Boeing. On one hand, you've got these powerful, long-term market forces,
Yeah,
things that should be driving monumental success.
it should be, yeah.
And then on the other hand, this series of severe self-imposed wounds that have just hammered its reputation and its balance sheet.
It truly represents a high-risk, high-reward proposition for anyone looking at its future, doesn't it?
Very much so. High risk, potentially high reward.
Okay, let's start with the big picture then.
Ah,
Our source material paints this, well, almost paradoxical investment case.
it is quite paradoxical.
Boeing is riding these powerful secular tailwinds, these massive long-term forces, pushing the whole industry forward.
Yet demand for air travel, defense spending, huge drivers.
But despite that incredible momentum, it's constantly battling severe self-inflicted operational and financial challenges. It's like having, I don't know, a perfectly designed sailboat in a strong current, but someone keeps poking holes in the hull from the inside.
That's a pretty good analogy, actually. What's truly fascinating here is how Boeing's fundamental value is actually anchored by its incredibly strong market position.
Right, the duopoly.
Exactly, within what's essentially a protected duopoly with Airbus. They possess a clear, visible pathway to long-term revenue and cash flow.
Because people need planes.
Fundamentally, yes. It's fueled by a multi-trillion-dollar demand cycle for new aircraft and services. Think about it. Global demand for air travel is only going one way up long-term.
Barring pandemics, of course.
Barring major disruptions, yes, the trend is up. This creates an inherently robust backdrop for a company that builds the very aircraft enabling that travel. That, in essence, is the powerful tailwind.
But despite that foundational market strength, here's the stark reality that just undercuts it. This pattern of profound execution failures.
It's undeniable.
You simply can't discuss Boeing without confronting the 737 MAX tragedies. That looms large.
Absolutely. And then the more recent January 2024 Alaska Airlines incident.
Right, the door plug.
These weren't just minor bumps. They've fundamentally damaged its competitive standing against Airbus
Massively.
and eroded what was once truly a sterling reputation for engineering excellence.
A century of reputation, really.
So tragic irony, given their inherent market advantage.
So this raises a critical question for us. How can a company with such incredible, almost unassailable market advantages
Right, advantages others would kill for.
be brought to its knees by its own internal issues? It seems almost unbelievable.
It does. And our analysis finds that while the long-term demand is robust, Boeing's path to recovery is, and this is a quote, fraught with significant execution risk.
Fraught. That sounds about right.
They are in the nascent stages, the very beginning of an arduous cultural and operational transformation.
And not by choice entirely.
No, and all under the unprecedented prescriptive oversight of the Federal Aviation Administration, the FAA.
Prescriptive is the key word there. They're being told what to do in many ways.
Very much so. This regulatory scrutiny, specifically the production cap on the critical 737 MAX program, isn't just a hurdle, it's the primary governor on their financial recovery.
It sets the speed limit.
Exactly. It means Boeing isn't just trying to fix its problems, is doing so with a very strict supervisor looking over its shoulder, dictating the pace.
Okay, so let's zoom out further then. The aerospace and defense industry itself, you mentioned, is booming.
It is.
Our sources call it a supercycle of demand. What exactly does that mean? It sounds incredible, yet Boeing's struggling.
Well, if we connect this to the bigger picture, it means demand is significantly outpacing supply in both commercial and defense segments.
Right.
A supercycle isn't just a temporary uptick. It signifies a multi-year structural imbalance. The underlying demand for aircraft and defense tech is fundamentally outstripping the industry's ability to produce.
So more orders than planes being built.
Way more. In 2024, the top 100 aerospace and defense, or A&D, companies saw a record $922 billion in global revenue. Record revenue.
Wow.
Yet production simply can't keep up. This creates a uniquely favorable, long-term environment for established players like Boeing and it's a big
If they can get their act together.
if they can actually produce. It's a seller's market, but one that many, including Boeing, are struggling to fully capitalize on.
And we see the supercycle playing out in two main areas, right? Commercial aviation and defense. Both seem to be firing on all cylinders in terms of demand.
Precisely. In commercial aviation, the post-pandemic recovery has been swift, surprisingly robust.
Faster than many predicted.
Definitely.
Yeah.
Leading to a surge in demand for new, more fuel-efficient aircraft. Airlines want to modernize, they want to expand their fleets.
Driven by environmental goals too, partly.
Partly environmental, partly the sheer increase in passenger numbers, and partly just the age of their existing aircraft needing replacement.
Makes sense.
This has resulted in a record industry-wide commercial aircraft backlog. Over 16,000 units.
16,000 planes waiting to be built.
That's more than a decade of production at current constrained rates.
A decade? That's incredible visibility.
Exceptional long-term revenue visibility for any manufacturer capable of actually fulfilling those orders.
Okay, and then on the flip side, the defense sector also seeing a resurgence.
Yeah.
Offering a different kind of stability, perhaps.
Yes, let's say a deteriorating geopolitical landscape
Unfortunately, yes.
has driven a 9% increase in global defense budgets in 2024. Governments worldwide are investing heavily in next-gen military tech.
Things like space, cyber.
Space, cyber, advanced weapon systems, drones, surveillance. For diversified firms like Boeing, this provides a stable, often counter-cyclical source of demand.
Right, counter-cyclical is key.
It complements their more economically sensitive commercial business. When commercial might dip due to a recession, defense spending often stays robust or even increases.
It's a crucial diversification, especially now.
Absolutely.
Okay, here's where it gets truly interesting and a bit counterintuitive, you mentioned. Despite all this demand, production is severely constrained. Persistently fragile global supply chain is the phrase used.
That's right.
We're talking widespread labor shortages, scarcity of key materials, aluminum semiconductors, and inflation pushing up costs.
It's hitting everyone.
Limiting capacity for all the OEMs, not just Boeing. So what does this actually mean for who benefits from this boom? It sounds like the manufacturers might be missing out, paradoxically.
You've hit on a critical insight there. This supply-demand imbalance has actually shifted a significant portion of the industry's profitability away from the OEMs, like Boeing.
Away from them, to who?
And towards suppliers and aftermarket service providers.
The MRO guys. Maintenance, repair, overhaul.
Exactly. With OEMs unable to deliver new aircraft quickly, airlines are forced to extend the operational lives of their existing aging fleets.
Keep the old birds flying longer.
Precisely. And these older aircraft naturally require more intensive maintenance, repair, and overhaul. More parts, more service hours.
Makes sense.
What's fascinating here is that in 2024, engine makers and aircraft lessors actually generated over 90% of the aerospace industry's profits.
90%. Not the plane builders.
Not the plane builders. So the primary beneficiaries of this boom right now aren't necessarily the aircraft manufacturers themselves. It's the companies keeping existing planes flying and those financing them.
That's a stark contrast to how you'd normally think the industry works.
It really is.
So this incredible demand is shifting profits downstream, so to speak. But this situation also underscores something fundamental. For those already in this industry, the barriers to entry are sky high.
Extremely high.
Creating this huge competitive moat. Right. Which then begs the question again, why is Boeing, with all these structural advantages, struggling so much from within?
Absolutely. The commercial aircraft manufacturing industry is protected by some of the most formidable barriers to entry in the global economy.
Like a fortress.
Effectively insulating the incumbent duopoly of Boeing and Airbus from any serious new competition. It's not just difficult to get into this market. It's nearly impossible for a new player to compete at scale.
Right.
This competitive moat acts as a powerful shield, but one that, as you say, Boeing is currently failing to fully exploit because of its internal problems.
So what are some of those barriers for those listening who might think, why don't more companies just build planes? It's clearly not simple.
No, it's far from simple. The first is just prohibitive financial barriers, the sheer capital required.
The money.
To design, develop, test, certify, and then produce a new commercial aircraft is astronomical. Costs often run into the tens of billions of dollars.
Tens of billions.
For example, the Boeing 787 Dreamliner program alone cost over $32 billion to develop.
$32 billion for one plane program. Wow.
These massive high-risk investments have payback periods that can span decades. It makes it nearly impossible for new entrants to overcome that initial hurdle.
A startup just can't do that.
No way. No matter how good their idea, the capital requirements are just too vast and the return is too far off.
Okay. Huge upfront cost, long wait for return. What else makes it so hard?
Then there are the intense regulatory hurdles. Gaining airworthiness certification from authorities like the FAA in the US, EASA in Europe,
The safety regulator.
is a multi-year, technically exhaustive, and incredibly costly process. These stringent safety, environmental noise regulations act as a critical non-tariff barrier.
Protecting the incumbents.
Exactly. Protecting established players who have the experience, the relationships, and crucially, the resources to navigate this complex landscape. It's a regulatory labyrinth, really.
And I imagine the technical know-how required is immense, too. Building these machines must be incredibly complex.
It is. That's the technological and manufacturing complexity. Building modern aircraft requires a vast, highly skilled workforce engineers, technicians,
Specialized skill.
deep institutional knowledge built over decades, and the ability to manage an immensely complex global supply chain integrating literally millions of specialized components.
Millions of parts per plane.
This accumulated intellectual property, the physical infrastructure, the manufacturing techniques, it cannot be easily or quickly replicated by a newcomer. It's decades of learning and investment.
So what does this all mean for the big players, Boeing and Airbus? They've already cleared these monumental hurdles. They must have an almost unfair advantage.
Well, they certainly have significant incumbent advantages. Decades-long relationships with airline customers who are very sticky.
Right. Airlines don't switch easily.
Extensive global maintenance, repair, and overhaul MRO networks and support systems. And often, significant political and financial support from their respective governments.
True, they're national champions in a way.
These deep-rooted strategic relationships create a powerful competitive moat that new entrants find incredibly difficult to penetrate. They're protected by this ecosystem they helped build.
Okay, so for decades, it's been the Boeing and Airbus show, collectively controlling, what, 95% of the market?
Easily, yeah.
But our sources highlight a shifting balance of power. What's been happening within this duopoly? Has it been a slow drift or something more dramatic, especially with Boeing's recent issues?
What's truly fascinating here is that while the duopoly structure itself remains absolutely solid, no new players are breaking in.
Right.
The competitive balance within it has shifted decisively in favor of Airbus over the last decade.
Decisively.
And this trend has accelerated dramatically in the past 2 years, almost entirely due to Boeing's internal crises. It's less of a gentle shift, more like a rapid surge by Airbus.
Can you give us some numbers to really illustrate that shift? Paint the picture with data.
Sure. Over the 10-year period from 2015 to 2024, look at the orders and deliveries. Airbus secured an impressive 8,950 net orders
Almost 9,000.
and delivered 7,043 aircraft. Boeing, in stark contrast, had 5,012 net orders, significantly less, and 5,312 deliveries.
Big gap there.
Huge gap. This sustained outperformance led to a really significant milestone in 2023.
What was that?
The total number of Airbus aircraft in service globally surpassed Boeing's for the first time in history.
Wow. More Airbus planes flying than Boeing planes. That's symbolic.
Hugely symbolic. It shows a long-term trend that many thought might never actually happen.
So Airbus isn't just catching up. They've actually pulled ahead in terms of the global fleet. And 2024 seems to have been particularly stark, right? A really bad year for Boeing's share.
It certainly was. The competitive chasm widened alarmingly in 2024.
Why specifically?
A combination of that intensified regulatory scrutiny following the Alaska Airlines incident
The production cap.
and a prolonged machinist strike. Those two things severely crippled Boeing's production capabilities.
A double whammy.
Exactly. As a result, Boeing's share of total deliveries plummeted to just 30%.
Only 30%.
Its lowest level since the initial 737 MAX grounding period. It highlights just how fragile their production system became.
That's a massive disparity. A 30% share in a duopoly is. Well, it's not much of a duopoly from a delivery perspective that year.
Not for that year, no.
And this isn't just a blip, you're saying. It reflects something more structural.
I think so. This disparity reflects a deeper structural shift, particularly in the critical narrow-body segment.
The single-aisle planes, like the 737 and A320.
Exactly. The workhorses. The Airbus A320 family, which actually surpassed the Boeing 737 in total orders back in 2019,
Already ahead in order.
now commands a dominant 65% share of the single-aisle backlog.
65% of future narrow-body orders are for Airbus.
Of the backlog, yes. And with the FAA's production cap limiting Boeing's ability to compete and ramp up 737 production,
They can't catch up easily.
Airbus is cementing its long-term leadership in the most voluminous and profitable segment of the commercial market. It really is like one runner hitting a wall while the other sprints ahead.
So what does this all mean for Boeing's overall market position across its different businesses? Is it struggling everywhere, or is it more nuanced?
It's definitely nuanced. In commercial airplanes, BCA, yes, Boeing remains a dominant player globally, but has clearly ceded leadership to Airbus, especially in that high-volume, narrow-body segment. The 737 MAX lags the A320neo family badly right
Now,
now.
what about defense?
In defense, space and security, BDS, Boeing is still huge, fourth largest contractor for the U.S. Department of Defense, major programs. But
There's always a but, it seems.
its standing is tarnished by significant financial losses and execution failures on some key fixed-price contracts. We'll get into that.
Okay. And the third leg, services.
Lastly, in global services, BGS, Boeing leverages its vast installed base of aircraft. That's a huge competitive advantage. They compete against a fragmented market of MRO providers.
So commercial is challenged, defense has issues, services seems stronger.
That's a good summary. It's definitely a mixed bag.
Okay, let's dive deeper into Boeing's internal structure then. Our sources tell us that the Commercial Airplanes Division, BCA, historically the most important part of the company,
The crown jewel, really.
is now described as the epicenter of the company's operational and financial struggles. How did such a vital, once dominant segment fall into such a disarray?
It's quite shocking, really. This segment, which should be the engine of growth, main profit driver,
Right.
has tragically become a significant cash drain.
Burning cash instead of generating it.
Exactly. In fiscal year 2024, BCA's revenue collapsed by a staggering 32.6% to $22.86 billion.
Down by a third.
Roughly, yeah. This was a direct consequence of those production halts and slowdowns mandated by the FAA,
After the Alaska incident.
compounded by the labor strikes that further disrupted operations. The segment reported a significant operating loss.
How bad?
A negative operating margin of net 5.1% in Q2 2025, driven by critically low delivery volumes, the high cost of rework fixing planes already built,
Expensive fixes.
and necessary, frankly belated, investments in quality control systems. It's costly, complex, and deeply unprofitable right now.
So, huge hit to revenue, deep losses. What are the key products in this troubled BCA segment? Are they all equally problematic?
Well, the narrow-body 737 MAX family remains Boeing's most critical product. Absolutely vital.
The volume seller.
It accounts for the vast majority of its backlog, 4,862 unfilled orders as of July 2025. Huge number.
Still a lot of demand for it.
Yes, but its production is currently capped by the FAA at 38 aircraft per month.
That hard ceiling.
That regulatory ceiling isn't just a guideline. It's the single greatest constraint on Boeing's ability to generate revenue and cash flow right now.
So they physically can't build more even if they wanted to or could.
Not without FAA approval. The company's focused first on just stabilizing production at that rate, ensuring consistent quality, proving they can do it reliably,
Meeting the FAA's demands.
before it can even ask for permission to increase output towards its own targets of 42 per month or higher. It's a hard limit on their recovery speed.
Okay, that's the narrow body, the 737 MX. What about their larger planes, the wide bodies? Are they doing any better? Any bright spots there?
There actually is a brighter spot with the wide-body programs, specifically the 787 Dreamliner.
The Dreamliner, okay.
Production there has successfully ramped to 7 aircraft per month as of Q2 2025.
So they are hitting targets there.
Yes, and they have a target of 10 per month by 2026. The 787 has also seen strong order momentum. 243 gross orders in the first half of 2025 alone.
That's good news. Shows they can execute when things align.
It does. It shows that despite the overall turmoil, some parts of the commercial division are executing better and managing to deliver. A glimmer of hope, perhaps.
A much-needed glimmer. But I've also heard about problems with the 777X, their next-generation big wide-body.
Yes, the 777X.
Is that program also adding to the turbulence, or is it just normal development hiccups?
You're right to ask. Unfortunately, the 777X program has been a source of significant multi-year challenges, not just hiccups.
Okay, what kind of challenges?
It's been plagued by technical and certification issues. There was a critical engine thrust link problem that grounded the test fleet in 2024.
They're not good during testing.
No. Its first delivery has been delayed now to 2026. That's a full 6 years behind its original schedule.
6 years?
6 years. This multi-year delay isn't just a minor setback. It's a major strategic failure.
Why strategic?
It created a market vacuum that Airbus eagerly filled with its competing A350-1000. Airlines needed new large, wide bodies. Boeing couldn't deliver. Airbus could.
So Airbus picked up orders Boeing might have otherwise gotten.
Almost certainly. While the 777X still holds a respectable backlog, 551 unfilled orders, the delay has severely damaged customer relationships and ceded significant competitive advantage in that lucrative large wide-body market.
Another example of operational issues hurting market share.
Precisely.
So BCA is definitely a mixed bag then. The critical 737 MX under a regulatory cap, a successful ramp-up for the 787 Dreamliner, but a major strategic stumble with the 777X.
That sums it up well.
But despite all these issues and delays, the company still has that massive order backlog you mentioned, overall.
It does. That's the underpinning value proposition, in theory.
As of Q2 2025, the total company backlog stood at $619 billion.
Huge number.
With the BCA portion comprising over 5,900 aircraft valued at $522 billion. That has to count for something significant, right?
It absolutely does. This backlog provides a clear, multi-year line of sight to future revenue.
Assuming
the company can resolve its production issues and actually deliver these planes efficiently, reliably, and on time. It's a tremendous asset, but one that's currently, held hostage by manufacturing woes and regulatory constraints. Future revenue waiting to be unlocked.
Okay, let's move to defense then. The BDS segment. It actually became Boeing's largest by revenue in FY 2024, around $24 billion.
Yes, but that was largely by default.
Right, our sources say that was mostly because the commercial airplane revenue collapsed, not because defense had some huge growth spurt.
Exactly. BCA shrank so much that BDS became #1 in revenue, not through stellar growth itself.
So how's this part of the business truly doing? Is it a stable foundation amidst the commercial turmoil?
Well, this segment certainly benefits from that strong tailwind of rising global defense spending we talked about.
Okay, good.
And it maintains a healthy backlog of $74 billion as of Q2 2025. The contract pipeline looks robust.
Any examples?
Recent major awards include a $2.56 billion contract for the E-7A airborne early warning and control aircraft that's based on the 737 airframe,
Okay.
and a $450.5 million contract for Japan's F-15 modernization program. So on the surface, the demand looks promising. It offers some much-needed stability and diversification.
That sounds like genuinely good news, a crucial balance. But knowing Boeing's recent track record, I'm bracing for the but.
Hey, you're learning.
Is this segment as stable as it appears, or are there underlying problems here too?
Unfortunately, yes. There is a significant but. The segment's financial performance has been severely undermined by a portfolio of legacy fixed-price development contracts.
Ah, fixed price, meaning Boeing bears the cost overruns.
Exactly. Programs like the KC-46A tanker for the Air Force.
Which has had many issues.
Many. The T-7A Red Hawk trainer, the VC-25B, that's the next Air Force One rover.
Also troubled.
And the MQ-25 Stingray drone for the Navy. These have collectively incurred billions, with a B, billions of dollars in losses.
Billions in losses on contracts they already won.
Due to massive cost overruns, schedule delays, persistent technical challenges. In Q3 2024 alone, Boeing recorded $2 billion in charges related to these programs.
$2 billion in one quarter, just from these legacy contracts.
Illustrates the sheer magnitude of the financial hemorrhage from these specific deals.
What's the root cause here? Was it just bad luck, underestimating complexity, or something more systemic?
This raises that important question. Why were these contracts so problematic? Boeing is historically a defense giant.
Right.
Our sources indicate these losses are the direct result of a past strategy, making aggressive, often deliberately lowball, bids to win the contracts in the first place.
Buying their way in, hoping to make money later.
Essentially, yes. The strategy was predicated on the assumption they could make up for initial losses through high-margin aftermarket services and future production blocks. That has proven to be a significant failure in risk management and execution.
So the follow-on profits didn't materialize as expected, or the initial losses were just too big?
A combination of both, compounded by execution problems. While management has publicly sworn, they will never again sign such fixed-price contracts for development programs.
Closing the barn door after the horse is bolted?
A bit like that, yes. The financial drag from these existing agreements will continue to weigh on BDS profitability for years to come. It's a strategic misstep from the past, casting a long shadow.
Okay, so commercial is struggling mightily. Defense has these legacy contract anchors dragging it down. It sounds like a lot of challenges. Is there any part of Boeing that's reliably performing? Anything offering a lifeline?
Absolutely. And this is a critical bright spot, cannot be overstated. Boeing Global Services, or BGS.
The services arm.
This has been the bedrock of Boeing's financial performance throughout its recent crises. This segment provides high-margin aftermarket services, parts, maintenance, training, digital solutions.
To both commercial and defense customers.
Yes. It's the stable, consistent earner amidst all the turbulence, proving its resilience.
And the financials for BGS, I assume, look quite different from BCA and BDS.
Night and day. In FY 2024, BGS was the only Boeing segment to generate a positive operating profit.
The only one.
The only one. Contributing $3.62 billion on revenues of nearly $20 billion. Its performance has remained strong into 2025, posting an impressive operating margin of 19.9% in the second quarter.
Almost 20% margin? That's healthy.
Very healthy. This consistent profitability offers a crucial financial cushion for the company, provides capital that can be reinvested or used for that massive debt pile.
So what's the strategy for this consistent profit engine? How do they plan to leverage this strength and grow BGS even further?
The growth strategy is centered on capitalizing on that massive global installed base of Boeing aircraft. Millions of planes out there needing service over their lifespans.
Right, a captive audience in many ways.
Boeing's long-term forecast projects a total addressable market for aviation services worth an incredible $4.7 trillion over the next 20 years.
4.7 trillion.
Trillion, yes. From 2025 to 2044. Key growth initiatives are focused on expanding digital offerings, predictive maintenance, advanced data analytics, comprehensive fleet management solutions.
More software and data.
Exactly. These provide high-margin, recurring revenue streams. They're less cyclical than new aircraft sales.
Makes BGS crucial for stability.
Absolutely crucial. For stabilizing earnings and cash flow long-term. So for you, the listener, this segment is vital. It's a source of stability in an otherwise very turbulent company. A consistent performer generating predictable, high-margin revenue. Can't overlook it.
We often hear about Boeing's crisis, singular. But our sources emphasize they're not emerging from a crisis. It is in the middle of a profound and existential one.
That phrasing really captures the severity, doesn't it? Not past tense, present tense.
Let's go back to the beginning of these major issues. The 737 MAX tragedies in 2018 and 2019, that felt like a turning point, a moment that fundamentally shifted everything for Boeing.
It absolutely was. The two fatal crashes, Lion Air 610, Ethiopian Airlines 302, were not isolated events. They were symptoms of a systemic breakdown.
Systemic.
The financial impact alone was staggering. Direct costs estimated at $20 billion. Indirect costs, lost sales, customer compensation exceeding $60 billion.
$80 billion all told.
Roughly.
In that ballpark, yes. And the company ultimately paid a $2.5 billion settlement to resolve criminal fraud charges for misleading safety regulators about the MCS system.
Criminal fraud charges, that's serious.
The scale of the financial damage was just unprecedented.
But the money, as staggering as it is, wasn't even the worst of it, was it? The damage to the brand, the erosion of trust that feels deeper, harder to fix.
You're absolutely right. More damaging, more lasting was the blow to Boeing's reputation.
That century-old image.
Exactly. The crisis shattered the company's image as a paragon of engineering excellence and safety, replaced it with the perception of a corporation that prioritized profits over people.
That's a damning perception. And this isn't just about, a few bad decisions. Subsequent investigations, reports, trace the root of this cultural decay back decades. Particularly to the 1997 merger with McDonnell Douglas.
Ah, the merger, often cited.
Widely seen as initiating a shift from an engineering-led culture where engineers had the final say
Right.
to one dominated by financial management and aggressive cost-cutting, where finance called the shots.
So the culture changed fundamentally after that.
That's the argument.
Yeah.
And the insight here is how that shift, valuing financial metrics over engineering mastery, systematically eroded design integrity, stifled critical feedback from engineers,
Made it harder to speak up about problems.
and ultimately put short-term profit ahead of long-term safety and reputation. It wasn't just a management decision. It was a philosophy that permeated the company, with devastating, tragic consequences.
It raises that question again. How deeply ingrained is this cultural issue, and how hard will it be to truly reverse?
That is the multi-billion-dollar question facing the new leadership.
A century-old legacy, and yet it seems the lessons maybe hadn't fully sunk in. Because then came January 5, 2024.
Just when you hoped they were turning a corner.
Another incident slammed them back to reality. A mid-exit door plug detached from an Alaska Airlines 7379 AMAX in midair. Terrifying.
Terrifying, and brought that crisis right back into agonizing, sharp relief.
Yeah, any sense of progress just vanished.
And here's where it gets really interesting, and frankly, quite alarming about the state of their processes.
What did the investigation find?
The subsequent NTSB investigation revealed a shocking, almost unbelievable rudimentary manufacturing failure.
Not design this time, but manufacturing.
Right. 4 critical bolts intended to secure that door plug had never been installed.
Never installed, just missing.
Simply not there. This wasn't a complex design flaw like MPS's. It was a fundamental lapse in basic manufacturing quality control, suggesting processes weren't followed, checks weren't done.
That's almost worse in a way. So basic.
It was a stark wake-up call. It indicated that deep-seated issues were far from resolved.
And the FAA's response this time was swift and unprecedented, wasn't it? Signaled a real shift in their oversight.
It was immediate. The agency grounded 171 aircraft of the same configuration instantly, impacted airlines worldwide.
Huge disruption.
Crucially, it went further. Took the extraordinary step of halting all planned production rate increases for the 737 MX program,
The production cap we discussed.
imposing that hard cap of 38 aircraft per month. This wasn't just a temporary pause. It was a direct external brake on Boeing's recovery. Indefinite.
And they launched their own audit.
Yes, a comprehensive audit of Boeing's production lines and those of its key supplier, Spirit AeroSystems, who made the fuselage with the door plug, to really understand the systemic issues.
What did that audit reveal? Was Alaska Airlines just a fluke, or did it confirm deeper problems?
It confirmed deeper problems. The audit uncovered multiple instances where both companies failed to comply with manufacturing quality control requirements, unequivocally indicating Alaska was not an anomaly, but a symptom.
A symptom of pervasive issues.
Exactly. This led FAA Administrator Mike Whitaker to state publicly, very bluntly, that the problems at Boeing were systemic, demanded a fundamental cultural shift.
Back towards safety.
Back toward a primary focus on safety and quality, above profits. The agency then mandated Boeing develop a comprehensive, time-bound, corrective action plan
Deadlines.
to address these systemic failures, effectively placing the company under direct, continuous regulatory supervision.
Continuous supervision.
This signifies a fundamental and likely permanent shift in the relationship between Boeing and the FAA, moving from delegated authority and trust
Where Boeing checked its own work, largely.
to one of direct, prescriptive oversight. Boeing is no longer on an honor system. It's under constant watch.
Wow. The FAA embedding themselves? That sounds less like oversight and more like, well, co-management almost.
It's certainly much more intrusive than ever before.
I can only imagine the impact on Boeing's autonomy and, frankly, on morale on the factory floor. How do you recover under that kind of intense scrutiny? What tangible steps has Boeing actually taken to address this?
Well, they have begun to implement their corrective action plan, albeit under this intense pressure.
What kinds of things?
The company announced immediate actions, bolstering quality checks, adding numerous new inspection points at its own factories and at Spirit AeroSystems, trying to catch errors earlier.
Or eyes on the process.
They also conducted dedicated team sessions on quality across the workforce, try to refocus everyone on fundamentals.
Yeah.
And significantly
Yes.
opened its factory doors to its airline customers for additional oversight inspections.
Letting the customers inspect their production line, that's unusual.
Highly unusual.
Yeah.
Demonstrates a commitment to transparency, even if compelled.
And the FAA is staying much more involved, embedding themselves, as you said.
Yes, the FAA has institutionalized this more intrusive approach, permanently increasing its on-site safety inspector presence at Boeing and Spirit facilities.
So FAA inspectors walking the factory floor every day.
That's the reality now. It signifies this new, less trust-based regulatory relationship. The FAA will directly verify compliance, not delegate authority.
No more self-certification on key items.
Less of it, certainly. The core of this mandated recovery effort is a comprehensive overhaul of Boeing's safety culture.
Culture change again. Hardest thing to do.
Incredibly hard. It involves strengthening their formal safety management system, the SMS, simplifying complex manufacturing processes to reduce chances for error,
Making things more foolproof.
and crucially, creating robust channels for employees to report safety concerns without any fear of retaliation.
Whistleblower protection, essentially.
Absolutely vital. Rebuilding trust from the ground up, empowering those closest to the work to speak up. That's key to any real cultural shift. Hashtag #NIV, financial performance and capital allocation.
Okay, let's pivot to the financial impact of all this turmoil. Our sources provide a 10-year financial summary that, well, it starkly illustrates Boeing's decline.
Stark is the right word.
It went from a peak of operational excellence, financially speaking,
A cash machine, really?
to profound financial distress. It's quite a fall from grace.
It is. To give some context, the years 2015 to 2018 were really strong for Boeing. Growth, profitability, robust net income, strong free cash flow.
What were the numbers like back then?
For example, in 2018, just before the first MAX crash, they reported $10.46 billion in net income and $13.6 billion in free cash flow.
Solid blue chip numbers.
Absolutely. Peak performance years, demonstrating what they were capable of.
And then came the crisis, starting in 2019. Completely upended that picture, turned black ink to deep red.
Deep red. Beginning in 2019 with the MAX crisis, every key financial metric just collapsed. The company has reported substantial net losses for 5 consecutive years now.
5 straight years of losses.
Yes. Fiscal year 2024 was particularly challenging. Revenue fell to $66.5 billion, and the net loss widened to a staggering $11.8 billion.
Almost $12 billion lost in 1 year.
Exacerbated by those production stoppages and the ongoing quality issues we discussed. This isn't just a dip. It's a sustained period of deep losses that has profoundly weakened the company.
What about free cash flow? The lifeblood, of an industrial company, essential for investment, debt repayment. How has that trended?
Free cash flow, or FCF, tells a similar, very concerning story. After generating robust FCF in that pre-crisis era,
It's the $13.6 billion in 2018.
Boeing experienced years of significant cash burn, consuming massive amounts of capital, including a staggering negative $19.7 billion in 2020.
Burned through almost $20 billion in cash in 1 year.
Yes, during the peak of the MAX grounding and the start of the pandemic, while the company managed to return to positive FCF in 2022 and 2023.
A brief recovery.
A brief period of optimism, yes.
Yep.
$2.3 billion in 22, $4.4 billion in 23. But it relapsed in early 2025, reporting cash usage of $2.3 billion in the first quarter alone.
Back to burning cash.
Yes. And a key benchmark for their recovery, a target they set back in 2022,
What was that target?
was achieving $10 billion in annual FCF by the 2025-2026 timeframe. That was the goalpost for demonstrating recovery.
$10 billion a year. That sounds ambitious now.
Given the new production constraints and regulatory oversight, that timeline is now widely considered to be at high risk, pushed back significantly.
Okay, so losses, negative cash flow. What about profitability measures like return on invested capital, ROIC?
Right.
Showing how efficiently they use their capital. Must have cratered.
You're right. ROIC, a key measure of profitability and capital efficiency, has been decimated.
What was it before?
After peaking at an incredible 116.3% in the pre-crisis period, indicating exceptional efficiency.
Wow, over 100%.
ROIC has been deeply negative for several years. For the 12 months ending December 2024, return on capital employed, ROCE, another similar metric, stood at a dismal negative 19.9%.
Negative 20% return on capital.
Starkly reflecting the company's current inability to generate profits from its vast asset base, signaling deep inefficiency that has to be reversed.
Okay, a company facing these kinds of losses, burning cash, often has to rely heavily on debt to stay afloat, right?
Absolutely. Borrowing becomes essential.
What's Boeing's debt situation looking like? Has it become a major vulnerability?
It has. To navigate those twin crises, the MAX grounding and the pandemic hitting air travel,
A perfect storm?
Boeing took on a substantial amount of debt, most notably through a massive $25 billion bond issuance in 2020.
$25 billion in one go.
Yes, this has left the company with a fragile balance sheet. and significant debt maturities coming up.
When is debt due?
$4.3 billion due in 2025, another $8.0 billion in 2026. Big payments looming. Their total debt ballooned from $13.6 billion in 2018
Before the crisis.
to $57.5 billion in 2024.
Whoa! From under $14 billion to over $57 billion in debt.
A massive increase. Severely constrains their financial flexibility.
What has that mountain of debt done to their credit rating that's crucial for borrowing costs?
As you'd expect, this financial strain has led to a series of credit rating downgrades.
Down towards junk.
Getting close. As of late 2024, both major rating agencies, Moody's and S&P Global, rate Boeing senior unsecured debt at the lowest tier of investment grade, by 3 and BBB.
Just one notch above junk status. On thin ice.
Very thin ice. And both agencies maintain a negative outlook, explicitly warning that a failure to stabilize operations, generate positive free cash flow,
Might trigger a downgrade.
could trigger a further downgrade to non-investment grade or junk.
And what would a junk rating mean?
It would materially increase Boeing's cost of capital, make borrowing much more expensive, could complicate their ability to finance operations. So defending that investment grade rating is a paramount strategic priority for management right now.
They absolutely cannot afford to be downgraded to junk.
It would be a major blow.
So what does all this mean for how Boeing uses its capital going forward? It sounds like a complete forced shift in priorities, away from shareholder returns toward survival and repair.
That's precisely right. A complete and forced reversal of its capital allocation strategy. Driven by necessity, not choice, they simply don't have the luxury of their prior approach.
What was it like before the crisis? Our sources paint a picture of a very different, almost aggressive approach to rewarding shareholders.
Oh, very different. The pre-crisis era, say 2013 to 2018, was defined by an aggressive focus on returning capital to shareholders.
Buybacks and dividends.
Loads of them. The company spent over $43 billion on share buybacks in that period, consistently increased its dividend, culminating in a massive $20 billion share repurchase authorization announced in December 2018.
Just before the crisis hit.
Exactly. This strategy, while popular with investors at the time, is now widely criticized
Why?
for having potentially starved the company of crucial investment in new product development, engineering excellence, maybe factory upgrades, perhaps inadvertently contributing to some of the very issues we see today.
Prioritizing shareholder returns over long-term investment.
That's the critique.
And the shift post-crisis. A stark, unavoidable change, clearly.
Absolutely. The financial crises forced a dramatic pivot. Dividends and share buybacks were immediately suspended in 2020 to preserve liquidity
Halted completely.
and have not been reinstated since. The company's capital allocation priorities are now crystal clear, and in this order.
Okay, what's number one?
Number one, non-negotiable top priority, debt reduction. Using all available free cash flow to pay down debt and strengthen the balance sheet.
Fix the balance sheet first.
Priority 1, 2, and 3, almost. Second priority, investment in operations.
Reinvesting in the business itself.
The significant capital being deployed into R&D and CapEx, aimed specifically at improving manufacturing quality, stabilizing the supply chain, enhancing factory safety, investing in digital tools, fixing the core business.
How much are they spending there?
In 2024, Boeing invested $6 billion in these areas. A clear focus on fixing things from the inside out.
So no shareholder returns, dividends, buybacks in sight for a while then.
Not for the foreseeable future. Management has made it crystal clear. Any consideration of resuming shareholder returns is a distant prospect.
What needs to happen first?
It's explicitly contingent upon achieving a state of sustained high-level free cash flow generation, hitting that $10 billion target probably, and a materially delevered balance sheet. Much less debt. The focus is entirely on operational stability and financial health before any thought of rewarding shareholders. A complete transformation of financial philosophy forced upon them.
Okay, despite all these near-term challenges, the financial woes, the operational nightmares, our sources highlight a very powerful safety net for Boeing. The long-term growth in commercial aviation demand. It's almost a given, isn't it, that the world will just need more planes over the long haul.
This is indeed the core of the bullish investment thesis, the ultimate backstop for Boeing's potential recovery.
What do the forecasts say?
Boeing's own commercial market outlook, looking out to 2044, projects a global need for 43,600 new airplanes.
43,600 new planes.
A market valued in the trillions of dollars. This is driven by an anticipated annual passenger traffic growth rate of 4.2%.
growing faster than the global economy.
Consistently, yes. The world simply needs more planes to move people and goods. It's a fundamental truth of global commerce and travel in the modern era.
And it's not just Boeing being optimistic about their own market, right? Do others agree?
That's correct. This outlook is strongly corroborated by their main competitor, Airbus. They forecast nearly identical demand, 43,420 new aircraft over the same period.
Almost exactly the same number.
And industry bodies like Airports Council International, ACI, also project robust long-term growth. Global passenger numbers expected to nearly double by 2045.
Double.
This isn't just internal optimism, it's a consensus view across the entire industry. Lends significant weight to that long-term demand story.
So what's driving all this sustained, almost insatiable demand? Where is this massive need for new aircraft coming from?
It's multifaceted, really. The primary drivers are the expansion of the global middle class, particularly in emerging economies. More people able to afford air travel for the first time.
Asia, Latin America, Middle East.
Exactly. There's increasing urbanization, concentrating populations in cities that rely on air links, and critically, the continued decline historically in the real cost of air travel makes it accessible to a broader population.
Flying is cheaper than it used to be, adjusted for inflation.
Significantly. As more people can afford to fly, and populations grow and move to cities, the demand for air transport just becomes undeniable. This immense, highly visible demand landscape is what Boeing hopes to capitalize on once its operational issues are resolved.
So knowing that this powerful demand is there, where is Boeing specifically focusing its efforts for future growth? How are they positioning themselves to eventually capture this enormous market potential?
Their long-term strategy is heavily focused on capturing growth in specific high-potential areas. First, as you mentioned, emerging markets.
Where the growth is fastest.
Regions like Asia Pacific, the Middle East, Latin America, projected to account for more than half the global commercial fleet by 2044, up from about 40% today.
A big shift.
Boeing's strategy involves establishing a deeper regional presence, local partnerships, building out MRO and services hubs, tailoring offerings. They want to be embedded in those growth markets.
And the defense sector, still a big part of the future strategy, despite the current issues.
Yes, absolutely. That resurgence in global defense spending provides a stable, growing revenue source. Countercyclical, as we said.
So what are they focusing on in defense?
Strategic initiatives in BDS are focused on capturing a larger share of government contracts, hopefully with better risk management this time. Key R&D priorities include autonomous systems, drones like the MQ-25, MQ-28,
Unmanned systems.
advanced surveillance platforms like the P-8 Poseidon, the E-7 Wedgetail, and strategic partnerships with NASA and the DoD on space exploration and national security satellites. It's a diversified approach.
What about digital solutions and sustainable tech? Are they innovating for the future there too?
It's core to the strategy, especially through the BGS division. Expanding that portfolio of digital services, predictive maintenance, data analytics, fleet management, creating those stable, recurring revenue streams.
High margin services.
Exactly. And looking further ahead, yes, investing in foundational technologies for the next generation of aircraft, R&D into sustainable aviation fuels, SAF, alternative propulsion, hydrogen, electric, autonomous flight.
These are long-term bets, though.
Very long-term initiatives. Won't bear fruit tomorrow, but crucial for positioning the company to compete in the next major product cycle decades down the road, ensuring future relevance.
Okay. It sounds like powerful long-term tailwinds, clear growth strategies, a potentially hopeful picture for the future if they can get through the current mess.
Big if.
But you mentioned earlier that investing in Boeing today carries a substantial and multifaceted risk profile. What are these looming headwinds? What could still derail this recovery?
Right. The path is narrow and the risks are numerous. The most significant immediate risk is the new intensified regulatory and certification risk.
The FAA relationship.
The FAA's decision to cap 737 MAX production assumed direct control over the timeline for rate increases, introduces critical, externally dictated uncertainty. Boeing's ability to grow revenue and cash flow isn't just about operations anymore.
It's about satisfying the regulator.
Contingent on satisfying a more stringent, more skeptical regulator. Furthermore, the risk of additional delays in certifying the 737-7, the 737-10, the smaller and larger MAX variants.
They're still waiting on those?
And the 777X program remains high. Any further setbacks could trigger customer penalties, order cancellations, inflict more damage on that fragile reputation.
Okay, regulatory risk is huge. What about internal execution? Still a major concern.
That's the execution and operational risks. still paramount. Until Boeing can demonstrate a sustained period years, probably of stable production and flawless quality.
Here they fixed it.
The risk of another high-profile safety or quality incident remains elevated. Any new event, even minor, would likely have severe consequences, further damage relations, maybe even stricter oversight.
And the supply chain issues.
Compounding this is that persistent fragility in the global aerospace supply chain. The whole industry is grappling with shortages, labor, materials. Any significant disruption at a key supplier could quickly derail Boeing's carefully managed production ramp-up plans. Immediate negative impacts.
Are there competitive threats beyond just Airbus? Maybe new players? Geopolitics?
Yes, there are. Competitive and geopolitical risks. While the Boeing-Airbus duopoly is secure for the foreseeable future in terms of global competition,
No one else is close.
a long-term strategic threat is emerging from China's state-backed COMAC, Commercial Aircraft Corporation of China.
Ah, COMAC and the C909.
Exactly. Their C919 narrow-body, the planned C929 wide-body, they're not yet competitive globally on performance or scale, but COMAC poses a significant risk to Boeing's position in the crucial Chinese market itself.
China might just buy Chinese planes.
Beijing is leveraging state-directed orders national policy to build a domestic aerospace champion. This could effectively cap the duopoly's growth in what's projected to be the world's largest aviation market, walling it off over time.
A huge potential market becoming inaccessible.
A major long-term risk.
And broader trade tensions, U.S.-China specifically.
Yes, Boeing is highly exposed there. Retaliatory tariffs could significantly increase production costs. Nearly 30% of its parts are imported.
From China and elsewhere.
And more critically, escalating tensions could jeopardize future sales to that vital Chinese market, which only recently resumed taking Boeing deliveries after a long pause. It's a complex dance.
Finally, financial and economic risks. How vulnerable are they there?
Well, as an industrial manufacturer, demand for commercial aircraft is inherently cyclical, highly sensitive to the global economy, airline profitability, fuel prices.
If there's a recession, plane orders drop.
Typically, yes. And on a company-specific level, Boeing's balance sheet remains that key vulnerability we discussed.
So debt.
The high debt load, the credit rating teetering on the edge of junk, creates significant financial fragility. Limits their strategic flexibility to invest or weather another unexpected shock, operating with a very thin margin for error financially.
Okay, given everything we've discussed, the immense potential, but the profound wounds, the risks, the oversight valuing Boeing right now sounds like a serious challenge.
It's a really tough exercise, yes.
How do financial analysts even begin to approach it when so many traditional metrics are just broken?
You're right, it's profoundly challenging. Standard valuation multiples based on trailing earnings. Meaningless right now. They don't have positive earnings.
This PE ratio is out.
Completely.
Yeah.
Consequently, any credible valuation has to be based on an assessment of its normalized future earnings and cash flow potential.
What could it earn if things get back on track?
Exactly. An exercise heavily dependent on assumptions about the timing and success of this operational turnaround. It's more art than science right now, maybe.
So price to earnings, PE, useless for now.
With negative trailing earnings, the PE ratio is officially not meaningful. For historical context, when they were consistently profitable, their 10-year average PE was around 23x.
Gives a potential target, maybe way down the road.
The potential benchmark, yes, but miles away from today.
What about price to sales, PS? Focusing on revenue, not profit, any use.
PS is probably the most relevant trailing multiple, given the lack of earnings. Boeing's trailing 12-month PS ratio is currently 2.24x.
How does that compare?
It's more expensive than some defense peers like Lockheed Martin at 1.49x, but less expensive than others like RTX at 2.55x. Slightly higher than the peer average, but below the broader U.S. A&D industry average.
So inconclusive.
Suggests a mixed valuation picture based on sales. Doesn't scream cheap or expensive, reflects the uncertainty.
What about forward-looking estimates, trying to project where earnings will be? Is the market pricing in a recovery?
Yes, the market is definitely pricing in a significant expected recovery. The one-year forward enterprise value to EBITDA ratio, EBITDA, is currently very high, 53.3x.
Very high.
But this is projected to decline significantly to 23.8x in 2 years and 17.5x in 3 years.
Assuming earnings recover strongly.
Exactly. That would bring it roughly in line with the industry median of around 20x. This trajectory shows the market is betting on a substantial earnings recovery over the next few years.
How does that compare to Airbus?
Well, Airbus is currently profitable. Trades at a forward PE of around 29x. It makes Boeing's valuation much harder to assess like for like. Boeing's value is still largely a projection of future turnaround success.
Okay, so if simple multiples are tricky, how do sophisticated analysts try to get to the intrinsic value of Boeing? What other methods come into play?
The core of any intrinsic valuation right now rests on estimating that normalized earnings and free cash flow potential. What can Boeing earn consistently once production stabilizes, margins recover?
Back to that $10 billion FCF target.
The company's 2022 guidance, targeting roughly $10 billion annual FCF by 2025-2026, serves as a useful, albeit now clearly delayed and maybe optimistic, anchor for this analysis.
If they hit that, the stock re-rates.
Achieving that level of cash generation would fundamentally re-rate the stock, move it from speculative turnaround to stable blue chip. That's the bull case.
What other methods are used? Discounted cash flow? Some of the parts?
Yes. Given all the risks we've detailed, execution, regulatory financial analysts need to apply a higher than average discount rate in any discounted cash flow or DCF model.
Penalizing future cash flows more heavily due to uncertainty.
Exactly. The riskier the path, the more you discount future potential earnings. Those dollars in 5 or 10 years are worth less today because they're less certain.
Makes sense. What about some of the parts? Valuing the divisions separately.
SOTP analysis can provide a more nuanced valuation here. It's like looking at Boeing not as one entity, but 3 distinct businesses.
How would that work?
You could value the stable, highly profitable BGS services segment separately, maybe using a higher multiple, like a high-quality industrial services business.
Give it credit for its strength.
Then the more cyclical, currently unprofitable manufacturing segments, BCA and BDS, would be valued differently. On a normalized earnings basis, maybe, but with a lower multiple reflecting their higher risk profile and current struggles.
So you don't let the problems in BCA and BDS drag down the perceived value of BGS.
Exactly. This approach helps highlight the significant embedded value in that BGS division, which might otherwise be obscured.
So for you, the listener, trying to make sense of Boeing's investment case, what are the critical questions you need to ask yourself? What does it all boil down to?
I think the valuation of Boeing today really boils down to 3 critical questions.
Okay, number 1.
First, what are realistic, sustainable operating margins for the BCA segment post-recovery? Can they get back to those low double-digit margins they saw pre-crisis? Or have the increased costs of quality, the regulatory burden, maybe a less favorable product mix, permanently impaired peak margin potential? That's key.
Okay, realistic future margins. Number 2.
Second, how should that massive order backlog be truly valued? Yes, $522 billion in BCA backlog is a tremendous asset, unparalleled revenue visibility, but its present value must be heavily discounted to account for the long delivery timeline over a decade. The execution risk, can they actually build them profitably? Potential customer concessions or cancellations, and the basic time value of money. It's a gold mine, but buried deep, hard to access.
Got it. And the third critical question.
Third, what is the appropriate valuation discount relative to peers and historical norms? Given the severe execution risks, the regulatory overhang, the damaged trust, a significant valuation discount to its own history, and especially to its more stable competitor Airbus, seems warranted.
It shouldn't trade at the same multiple as Airbus right now.
Logically, no. The central debate for investors is whether the current stock price reflects a sufficient discount for all these multifaceted risks, or maybe an insufficient one, or even too much of one. That's the core investment puzzle. #7, management and corporate governance.
It seems clear, listening to all this, that Boeing's operational and safety crises are inextricably linked to failures in its corporate culture and governance.
Deeply linked, yes.
What changes have we seen in leadership? How significant have these overhauls truly been in addressing those root causes?
Well, in response to just intense, unrelenting pressure regulators, customers, investors, the company has initiated a sweeping overhaul of senior leadership and board structure. Represents a critical inflection point, potentially.
Driven by the Alaska Airlines incident.
The fallout from that incident in January 2024 triggered a dramatic management shakeup. In March 2024, Boeing announced CEO Dave Calhoun would step down by year-end.
Calhoun out.
Independent board chair Larry Kellner would not stand for re-election, and the head of the commercial airplanes division, Stan Deal, would retire immediately.
A clean sweep at the very top.
Pretty much. A clear message from the board that significant top-level change wasn't just desired, it was demanded. Accountability.
So who's stepping in? What do their backgrounds tell us about the new direction?
This leadership sweep was a clear acknowledgement a new direction was required. The board appointed Steve Mollenkopf, an existing independent director, as the new board chair. bringing some external perspective to the chair role.
Okay. New CEO for BCA.
Stephanie Pope, who had recently been appointed as the company's overall chief operating officer, was immediately named the new head of BCA, a critical internal promotion into that hot seat.
And the top job, the overall CEO replacing Calhoun.
In July 2024, the board announced the selection of Kelly Ortberg, a respected industrial executive, strong operational background from his time leading Rockwell Collins. He became president and CEO effective August 2024.
An outsider with operations experience.
No.
Significant.
Very significant choice. And the Defense Division, BDS, also saw a leadership change, with Steve Parker named permanent CEO there. So a mostly new team, blending some internal experience with crucial external operational leadership, signaling that shift in focus.
What's their mandate? What are they specifically tasked with achieving, especially regarding that deep cultural issue?
This new leadership team has a clear, unequivocal mandate: stabilize the company and fundamentally rebuild its culture around a primary, unwavering focus on safety and quality.
Safety and quality first.
Oh.
Profits second or maybe third.
That's the message. The selection of an external CEO like Ortberg with that strong engineering and manufacturing pedigree is a huge signal. The board intends to shift away from the finance-driven leadership of the past decade or two.
Back towards engineering excellence.
The goal is to return to an emphasis on core engineering and operational excellence, a direct attempt to address those root cultural issues, moving away from a perceived profit-first mentality.
Okay, that's the executive team. What about the board itself? Have there been reforms there to improve oversight, ensure better governance?
Yes, the board has taken steps, particularly after the initial MAX crisis.
What kind of steps?
Most notably, they established a new permanent aerospace safety committee on the board, dedicated oversight of safety policies, processes design, production, operations.
A board committee focused solely on safety.
Yes. The board also actively recruited several new independent directors with deep expertise in engineering, safety, manufacturing.
Addressing criticisms they lacked technical knowledge.
Exactly. Adding much-needed domain expertise to effectively oversee such complex operations.
But despite these efforts, the scrutiny remains intense, doesn't it? Suggests the job isn't done.
Indeed. That 2024 FAA expert panel report, for example, described a disconnect between senior management and the workforce on safety issues, suggests cultural changes haven't fully permeated yet.
Still work to do.
And a federal judge rejected that plea deal between Boeing and the Department of Justice over the original MAX fraud charges, citing concerns about the proposed oversight mechanisms.
Indicating external bodies still aren't fully satisfied.
Right. It shows pressure from regulators, the legal system, on the board to ensure true accountability and drive genuine, lasting cultural change will remain a powerful force for the foreseeable future. Reforms are in progress, but the jury is still very much out on their long-term effectiveness. Hashtag outro ban.
Wow. What a deep dive this has been. We've uncovered a company with this just undeniable, almost unassailable position in a booming global market.
The potential is huge.
One deeply mired in self-inflicted wounds, and now under the watchful, prescriptive eye of regulators.
A company truly in the crucible.
From its struggling commercial airplane division, weighed down by quality issues, to the consistent profitability of its services arm. Boeing is a company in the throes of a profound, high-stakes transformation.
Absolutely. This analysis culminates in a really nuanced picture, doesn't it? Immense long-term potential, driven by that global demand.
Small wins.
Balanced against severe, immediate, and systemic risks. Boeing has not navigated past its crisis. It is in the very heart of it.
Still in the thick of it.
The recovery process will be long, arduous, measured in years, not quarters, likely marked by continued volatility. The timeline for full production rate recovery, controlled by the FAA, not Boeing.
A key point.
And Airbus has indeed solidified its competitive lead, especially in that crucial narrow-body segment, created a new, more challenging competitive landscape for Boeing.
So what does this all mean for you, the learner, trying to process all this?
Well, investing in Boeing today is truly a wager, a bet on the success of one of the most significant, most complex corporate turnarounds in recent history.
High stakes indeed.
The potential reward is substantial if it can successfully transition back to being that stable, cash-generative blue chip. The risk that the turnaround falters takes significantly longer than anticipated.
Leading to more financial strain.
More strain, increased competition, maybe even a permanent impairment of its competitive position.
So for the long-term investor,
the thesis is built on those powerful secular tailwinds, global aviation growth, the enduring duopoly, For the short to medium-term investor, though,
The focus has to be.
squarely on those significant execution risks. The daily grind of operational improvement, regulatory compliance, cultural change, that will define its immediate future.
Okay, so here's a final provocative thought for you to mull over as we wrap up.
Right.
Boeing's experience really underscores this critical, sometimes brutal tension between the relentless pursuit of profit and the foundational imperative of safety and engineering excellence.
A classic tension in many industries, amplified here.
As you think about this, what do you believe is the single most important factor for Boeing to regain not just its financial footing, but the public's trust and truly rebuild its legacy? What does this deep dive into Boeing's struggles, its potential recovery, teach us about corporate culture and accountability in these high-stakes industries, where mistakes can cost not just billions, but tragically, lives? Something to consider.
A lot to consider there. Thank you for joining us on this deep dive.
Yes, thank you. Until next time, keep digging, keep learning, and stay curious.